What's going on, guys? Time for that recap. So, if you've seen it over on X this morning, very interesting trade, another 5-minute volume inbounce that we were bitching about in the last couple of videos where I want you guys to pay attention. So, if you've seen it, we were short up here. Anything under with speed down, zone right here. High sweeps to trap the longs, best case scenario for the magnet down, watching for tests and sweep up to short. And we called the 2618 as a sweep of highs because, as you can see here, 26,259 is the high from that breakout Amazon news candle. And 2618 for me right here was 26,264.20. And that was what the sweep we were looking for here. So we made that post obviously before open here. So let's get into how we got the trade. So here is the chart, and this is the fib in question. So it all starts with a 5-minute gap right here. So this is a 5-minute. We're on the 1-minute chart right now, but 26,101.83. That is a 5-minute volume inbounce. These are absolutely insane during regular trade. So as we've seen a little bit of a pop here, let's go over what we wanted to get for entries. Actually, we're just going to take it to the 5-minute here. So we're going to need to see the fair value. So we opened up in a little gap up, came up to that 200 SMA, and then we needed a retrace back down, nearing very close to that gap. So we had a pretty good outlook at the open here. We called some shorts down to here, 26,060 for the group there last night. Oh, excuse me. And we had a progression a little bit lower to that gap. I didn't really see that one coming, but we did get that short off the lower high. Trap in some of those longs, get the shorts interested, and then blow them out into this fair value gap here. So we'll start with the 5-minute chart to the left of us. Besides the gap up, we had that one fair value gap to deal with here that we had hit at open. And coming back towards this guy up here was best case entry. Now, we got some oblong news, but that news is the one that pressed us up into that zone. So we're going to delete this fib for now, show you where that 2618 came into first. So we're going to go to that 15-minute chart. We're going to see this massive 15-minute there. We're going to slide that to the right. And there we go. Now, the 5-minute fair value gap and the fib that we had made, we'll come back to that 5-minute green in a second, but I do want to throw this 15 on here to show you where the big dog fib came from. Held the GP, went to the 1618, did not return to the 100, which is part of our rule set. So when it squeezes out, it has to hit the 2618 next. There you go, to the penny for that high sweep call. So as we came into that 2618, we also obviously, like I said, looked to the right, and we had a fair value gap 15 hit right here, but it left a 5-minute, right, in question right here, wide open. So lucky enough for us, we got the news to press us all the way back, and we called short anything under, okay? So that's where that 2618 came on the 15. Now for the 5-minute, we have this guy right here, and we had the high-low fib, placed it on this candle with node tag GP. And this was the setup. So anything under that 666 extension was going to play. Initially, we're actually looking for a short under the 423,361 before that impulse news that set us up for the best case scenario short. So when we ended up right into that fair value resistance, right into a sweep to the 2618.15, I still was dedicated to this 5-minute overlap because that 15-minute gave us the sweep top of the 2618, and then anything inside the 666 was a really big watch for us continuing down. So we drew it up like this during that pre-market session and said, all right, well, as soon as we open up, we're just going to dive straight down to the 5-minute gap. It actually went a little bit lower and damn near went for the opening gap right here, but didn't quite make it. We ran into that obvious little support there that we had through the night. Okay. What are the other instances besides the two Fibonacci's, besides the fair value gap that were in play today? Well, on a Monday push, we had a gap up, right? And if we look to our left, we have an obnoxious algo over here that we will come back to eventually here. As we have, let's delete these, a few reasons to come back up, which I'll go over at the end of the video here. So 2 days prior here, we have this pre-market algo. We have it fib to the downside, big wick, right? And we move that wick, and these are only on TOS, all the way down to our favorite extension, the 3618. It pushes all the way back for a recycle to the 100 and leaves the golden pocket open. Now, this is where a scenario where I would have been looking for a long over yesterday's highs if it would have held and came into this golden pocket, but we had a 5-minute gap underneath us. That volume imbalance cannot be ignored. I have said this 10 trillion times for 10 years, right? Didn't release it to the public till recently, but let's get into the next part. So one of the bigger pieces to the pie here is the ETFs and the QQQ and SPY, right? So if we put QQQ here, we'll throw SPY on the right side and we'll focus on that open here just real quick. And as you see here, the price action push, again, from some of that Amazon news, launched us over yesterday's highs on both tickers. So we have that auto calculated here with that orange dashed line. That is yesterday's highs. So in pre-market trading, if we open up over yesterday's highs, that is a daily gap, right? We are opening. In a common gap filled, which is this scenario here, means the price action opens over yesterday's highs, resulting in the daily gap, drags it down to yesterday's highs. So this is another huge catalyst, despite the Fibonacci and 5-minute gap we just went over, to have the opening short called. Now, we had the best case scenario down to the golden pocket on SPY. So again, no reason for a gap up, no reason for longs on a Monday. We have FOMC tomorrow, or FOMC. Last week, we have JOLTS tomorrow, which is going to be a massive catalyst. And then I want to show you the last couple targets we had for this. Why did I just delete that thing? Watch, I learned how to do this just the other day. Oh, you can redo it. 12 years on TOS, I just figured that out. So the two targets down, and how did we get target shorts for the SPY? Well, our last trade day, we're going to go over to that 1-minute chart here and see Friday's action for that massive rally at the end of the day, right? That massive action left my favorite triple GP no tag, which means if you were to draw a Fibonacci point on the 1-minute chart right here, on this candle, this candle, this candle, any one of them, it will not have a golden pocket tag, right? So you draw that high low, that golden pocket is not tagged by the Fibonacci. We had 3 of those in a row, 1, 2, 3. So I make it a range, and I say the algos will drag us back to a triple no tag 1 minute eventually. So we had that marked off here, and these were our 2 targets. So for SPY, same exact theory applies. We had the pop over yesterday's highs. There was no reason for a gap up or a gap and go. There's no data, no jolts, no CPI, no FOMC, no Powell. No reason for that upset to go up higher. So we were all short biased, 0% longs today. After the fill of yesterday's highs, all we had to do was wait for it to stay and close inside yesterday's highs to retrace to the golden pocket. So my Fibonacci every single day you see on this channel, I'll throw a gold Fibonacci level from yesterday's highs to yesterday's lows. And I will focus on retracements or extensions competitively for that. So if we were to stay above yesterday's highs, that gold extension could put me as high as the 1618 on a long move. If we fail the prior candle, which means we are inside yesterday's highs, we generally retrace to one piece of the golden pocket. So despite having a algo triple down here in the white zone for our final short target, well, we also had the golden pocket. So those were the 2 magnet catalysts for me, showing you that we had ample downside. One of the more interesting things here when we go to the 5-minute chart, you're going to see a massive 5-minute candle in the pop and no tag at the open. So what that says here to me is that impulse Amazon news that popped us up needs to be fibbed out to the downside, because we could sweep those highs and then fail. Hint, hint, that's what we had the NQ top for, and we picked the 2618 at the beginning part of the video. Same theory here applies to algo candles that are developed off of news. So even on data, when you get a release of CPI or FOMC, I usually fib out those candles all the time. Well, this one was just a news blip of the Amazon, so I said, well, if we fib that out here, point to the downside, sweep highs, and fail to maintain above that and yesterday's highs, right? So yesterday's highs and the top of that algo candle, there's no real reason for us to stay up. And we'll watch the extensions to the downside. So even my regular system for Fibonacci pivot goes 1618, 2618, 3. You always have a chance to buy the 3618 if you never had a retrace to the 100 after any of these hits, which means this: if we take a fib high low and it goes 1618 and does not return to the 100, which you see it did not do that today, and again, you draw that same thing down to the 2618 and does not return to the 100, which it did not today. So action would have had to come down to the 2618, return to the 100. It actually went all the way down to the 3618, right? without touching a back trace of the 100, no retrace back. So once that 3618 hits, my favorite scalp is to go from 3618 to the 2618 on trend counter. So if we have a dead day straight down, I will buy that 3618 and it will rotate into the 2618. So it came to here and you did get that scalp today, 11 points on ES, right? So what's next? Well, we have JOLTS, so we're not going to make too many predictions here, but the JOLTS data coming out is going to solidify a few things for rate cuts and forward moving. Now let's go over the technicals on what I feel has an opportunity of playing out, right? So the two scenarios we got, if we go back down to the 1 minute chart, we do have another scenario where we have a triple 1 minute no tag GP. I'm going to take this and I'm just going to redo the range I had from Friday's candles, which we just talked about. So I'm going to take the high-low range of 3 no tag GP candles, and I'm just going to be aware of where that is. And the cup handle here that pushed back up end of the day patterned out and came all the way back to some of those really big retracement places we needed at the opening wash doesn't necessarily mean full reversal, and it doesn't necessarily mean full downside. So the confirmations are what we'll go over right now on which way I'm going to try to get the market read to go, right? So we have a clear target on the low side here of, right, triple, and they are associated with fair value gaps that are untested down here. One has been tested, so this last fair value gap here was obviously tapped into twice here before the run. Obviously, bottom of the day, you're not going to want to be taking too many shorts unless you're just tapping one more slip for a sweep under the 100, which we looked for at the end of the day too, but she broke back over. Now, moving into the futures again, I do want to note we still have the 5 minute gaps. Now, again, they're very different than regular trade gaps. They are data-driven gaps above us. So you're going to see that indicator lighten right here saying we do have a 5 minute opening gap up here, but as we covered in the past videos, we know what to do with that. So the two things I'm going to be watching very, very close, and we'll delete all this because all our short calls were done and over today for the goodness. And when this opens up, it has two choices, right? And on the 1 minute chart, if you go down to the futes here, you're not going to see those 1 minute no tag GPs here on NQ. You can go to the ES chart. And again, that bottom, let's delete this guy here too. There we go. That bottom, you'll see these down here. So same thing as the ETF right now. Sometimes between SPY and ES, these are not paired. And a lot of the times I like to check if they're paired, which means the ES chart with no tag GPs are showing the same thing as SPY. Because if they're not paired, they're not quite as strong, right? So I will fib this out as a range and tell you my last thoughts here. There we go. So let's take a look at what the Fibonacci personality set here. We have that high-low range. It moved into the 1618 extension. It did not move to the 100. It moved to the 2618. It didn't even move back down to the 1618 or the 100. So we are at that range of the 2618 again. See its first tag right here, comes down, does not hit the 1618, ranges up, flushes a little bit more, does not hit the 1618, and proceedingly gets bought up before coming back down. Okay, no big deal. So the over-under point for me on this algo, right, the computer is telling us here, is going to be the 2618. So at the open for 5 p.m., I'm going to check two things. Did it go up to the 3618 with confirmation and push trend here? Or did it start retracing for its opportunity down through the night to the 100? Now, because we have something massive like JOLTS, not FOMC, tomorrow, I'm not going to put too much prediction on which way. During regular technical analysis, we can give out a lot of fun predictions here and look for the confirmations together. But right now, we don't have any involving data, right? Because you can't really plan for that data. So what I'm going to do is I'm going to look for only two things with the bottom here. And that is the support that could be brought in at that 2618 to move up to the 3618 and to actually, continue higher here. And that's only because of JOLTS. And if JOLTS pushes us up, we will get an impulse move and a chance to move into those highs. If it does not, we need a confirmation, right? So we need stuff that is closing underneath the 2618 and starting a nice trend back down to that 100 where we'd like to see it. And of course, those are the 3 no tag GPs. You're only going to see a 5 minute down here, and inside the 5 minute candle is where that magic happens on the 1 minute with a triple GP. So underneath here, I will look towards that 100. And if not, we have an impulse on JOLTS. Well, let's see if it wants to go all the way up here. I don't trade the data pre. I'm going to wait for the data to populate, and then I'll either go short to here or long all the way up here. Now, the other thing that can stop us here for that is moving into some of the daily gap magnets on SPY and QQQ. So when you go to that daily chart here, you're going to note that some of our plays, a lot of them were based off of these daily gaps. You said, you've seen that I shorted the fourth gap on QQQ because they had 100% accuracy. I've never seen 4 in a row on a daily chart, especially at all-time highs. So in our last videos, we explained 1 gap here on the daily, 2 gap on the daily, 3 gap on the daily. You can see that one here. The fourth time it opened up, I was going to short the crap out of it into the prior day, which we did. And no matter what, we got to that GP, which is halfway retracement of that last candle. So if we start to roll back down, right, without piercing back up, and what I mean by that is we hold this little weird higher low, higher high red candle trend, and we push up to those 5-minute gaps that are associated up here. With 637 and beyond with that FOMC dump, well, that's that. Then we can slip up those highs. I'm going to be focusing very hard on this close. Now, pay attention for the macro leading into this, because doji bodies are something I've been using for over a decade and teaching over a decade how to read daily charts. This is one of the most important things that I've discovered over my course of 10 years. So the daily doji at all-time high 637 will be that intraday help. And if we go into an intraday chart here, just on the 15, you can clearly see that that is a very obvious pivot point even for today. So if that starts to head back up and we start breaking to the upside, maybe on jolts, we are going to attack that 5-minute gap way up here that we had seen. But if not, I think we are going to relax and chase some of those gaps to the downside if we stay under that doji on QQQ. We'll take a stop over here on SPY, and then we're going to see the same thing with a gap fill needed. Okay, so you see this blue level, that's what I charted off this doji, same exact thing, different placement obviously between QQQ and SPY. And then I did see us just obviously hitting those lows, and we didn't quite make higher highs here at all, even with the pre-market, just waves here. And we didn't see anything associated with getting anywhere close to that doji. So if jolts is the one that sent us way back up to attack those 5-minute gaps from the craziness at the FOMC, well, fine, so be it. But if we do move into that lower, I will start focusing on this very, very, very close to fill gap. So anything under that doji, again on SPY, if it pops up overnight and slams into this, I still think there's a time to dip before ripping, and we're going to try to figure out which one jolts is going to provide for us, and obviously moving on to some bigger data points through the week. So if we get that short set up, if we get that momentum to the downside, I will target that 333 1 minute we did talk about already, and the gap fill. As you see here, that gap up was here, and it was tested once, twice, 3 times. We had 3 candles inside that gap range kind of dipping in, and it just would not close. So that close right here of the floater, 678.47, is going to be a magnet for me onto the short side. So I will watch the 50% of this candle. We're going to see where we did our high low today. So right here, I'll put these fibs on obviously for tomorrow. That's high low range. I'll change them to the gold side of things here, like so. And then I will look for that progression. So anything underneath that GP, if we start to see her fail, even if it pops a little bit, we're going to start moving into target 1, right? And we'll move through that to final target of gap fill, okay? And if we don't, and we hold above that, it wants to attack that 5-minute gap, maybe the doji, and so on and so forth on our ES and NQ charts from the FOMC. We'll decide that. So a big piece of this will be over under that 50, 682.87 above, same level below, and those are going to be my target points for the day trades for the remainder of the week. Thanks for tuning in.